Everyone, welcome to a live episode of the Outlier podcast at GAC. I've got my friends with me. I've got Justin, I've got for my IMCU, Justin is Chief Strategy, and for the Chief Marketing Officer at IMCU. These two gentlemen are kind enough to give me half an hour on a Tuesday, busy morning. So, guys, thank you about that. I appreciate it. How has been the GAC so far?
Very good. I arrived a day late, but so far so good. It's good to see a lot of friends, credit unions across many states, but also many vendors. So I always enjoy this time of year catching up and seeing how everyone's doing.
Perfect.
Exhibit hall is always busy. So yes, lots of vendors to talk to and lots of people to share information with.
I'm sure, and this gentleman on my side, he's traveled from Tokyo. Almost been on a flight for 30 hours and still meeting the GAC and still kicking and running. And I wouldn't have been able to do it. So that's what GAC means for us. It's a family. First question, maybe let's start with for you've been coming to GAC forever, right? I mean, now this is not the first rodeo, for lack of better words, right?
Yep.
How do you think has GAC changed over a period of time, or do you think GAC has changed at all, or it's the same?
I think the guest speakers every year, the keynote speakers, the technology, it's really about the topics that they're covering as much as anything. The structure of GAC doesn't seem like it's changed very much. We have a lot of the same, there's the breakouts, there's the exhibit halls, there's the dinners in the evenings, all the fun things that go with it. And then the keynote speakers are really the area where we're able to learn what's the latest and greatest things that are going on. And obviously the last few years, it's been all about AI and how that's affecting everything.
So,
yeah, similar. I would say that I've been coming for over 10 years now, and it seems like the attendance each year continues to grow, but definitely, each year fewer credit unions, mergers, acquisitions. Definitely noticed that. From the exhibit hall, it seemed like 10, 15 years ago, it was the big four, Fiserv, Jack Henry, that kind of, that was the focal, and now it really is the fintechs have what's the latest and greatest features. So definitely seeing that shift, that they're really the ones providing a lot of the insight, foresight into technology.
Got it, absolutely. I mean, GAC is a melting pot of advocacy, innovation from vendors. The most important thing I believe is you meeting your peers and talking the same language. I mean, that's what credit unions are special for. We share, we talk about what we are doing other than the Wall Street box. So let's start with one strategic question with Justin. Justin, so obviously the market that you operate in is obviously been competitive because there's one mantra that I keep talking about or keep on hearing about. You cannot be everyone. Everything to everyone. Right? You have to be very specific because it's a sea of sameness, right? I mean, all credit unions offer the same checking account, the same credit card, the same mortgage, the same HELOC, no differentiation. Plus, you are competing with the larger banks, the fintechs, neobanks, right? My question is, if there were a couple of strategic bets that you are taking the next few years, 2 or 3 years, what would that be?
Yeah, I think as far as the next 3 years, if you were to walk down the hall here at GAC and survey a lot of the executives, I think all of them would say that their avenues for growth are pretty similar. That one that I think where we're different, maybe a couple of them I'll talk about, is indirect lending. We have never done indirect lending, and that is one that I said if you were asked survey executives, they would say there's no way to grow your loan portfolio without doing indirect lending. And I think that is something over the next 3 years we're going to grow our loans without doing indirect lending, and it's better relationships. We feel that we're able to go direct with a member and get a better, more relationship, more share of the wallet, and sell them products that maybe the dealership would handle otherwise. So I feel like that is something that has been good for us. So I would also indicate or mention that as you mentioned, trying to be all things to all people is difficult. And an area of success we've had is some of our niches, from small business lending to various refugee groups throughout the state that we've been able to, for whatever reason, been able to serve those members. So I think that would be an avenue for growth, is continuing to seek out those niches for us. But I would just mention lastly that another area is we don't do indirect lending, but we do. We have a strong business lending team. A lot of the community banks are no longer there.
Yeah.
So we do a lot of small business lending that to pick up the void where the big banks don't want to touch a particular loan. So those are a few of the areas that I would say that we're focused on over the next 3 years that maybe make us unique.
That's really unique. I mean, really 40 to 50% of the entire portfolio is indirect loans, and converting them to direct members, no one has that magic.
I know.
And for lack of better words, they are not relationships. They are, then they're not your primary members.
Right.
For lack of better words, you cannot convert them to checking account. So that becomes very difficult. That's something I didn't know about that part. So amazing. For thought, obviously, I'm a huge proponent of growth because I mean there are two people, you either are offensive or you're defensive. So I'm offensive, and go get. So you have to grow your pen and grow your book of business. So my question is across acquisition. So acquisition is expensive, and getting net new members is very difficult. So what do you think about how do you think about the balance? Winning new members and deepening existing relationships. So obviously, there's no way to prioritize one or the other. But what is your priority right now?
Right. It has to be a balance. You have to have a little bit of both coming in. As we do focus very heavily on our existing members and trying to continue to grow those relationships. We have tools that allow us to kind of predict where and when their next best product is going to be and what's the most important thing for them in the upcoming immediate future. So we're trying to get that information in front of them and make sure that they're familiar and thinking about additional products and services with us. But then we're also pursuing new membership as well. So through our marketing, through our communication, we are trying to competitively draw in new people. A lot of that, the ways that we're doing that is through some of our competitive lending rates, some of those sides of things. Attract them in with the auto loan potentially, and get them in, and then educate them on the additional products and services that we have, and not just have that auto loan. Grow that into a second auto loan or a credit card or a home equity as we go down the road. So expanding that portfolio.
Interesting. So essentially, I mean, auto loan is a leading product that you use to go to market, and followed by checking.
It is. Auto loan is definitely a traffic driver for us. We find in our market particularly that's been a successful kind of brand for us, and people know us for our competitive auto loan rates. And then taking those members now and turning that into more than just an auto loan is really the challenge for us.
It's something we track, is where do our new members come from, and our biggest lead is always auto loans, mortgage loans. If we can get that member into the door, into a great rate, a great product, great service, they're members for life. But that is, to me, our best market is trying to get that loan in their hands.
Another good strategy, because you do not do it direct. It means it doesn't harm you to pump up your auto loan portfolio and then go to cross sell.
Mm-hmm.
It makes sense. Just next question for you for across M&A. I mean, this not this GAC. All GACs are about just credit. And people predict that there will be 3,000 credit unions in the next 5 years. Some predict that there'll be like 3,500. No one knows about the actual number. How many of them will merge into one another? So M&A is accelerating, right? So what is IMCU stance on that? Are you guys looking to acquire credit unions, or looking to get acquired, or the other way, or not for anything else?
Yeah, that's a great question. And when we talk about part of our strategic plan, I would say that historically, IMCU has really a benefactor of mergers over the years. And we have done over 40 acquisitions.
Wow.
So a big part of our growth historically. Thorpe and I have been involved with four or five, probably, including one make acquisition. So definitely a big part of who we are. Like we do mergers well. Like let them, when we bring someone in, really try to instill the IMCU credit union culture into them. So that's something that's been a big part of our success. But I would say going forward, it's still something that we talk about. To your point, there are fewer credit unions, fewer banks, so it's fewer and farther between to have some of those. But I would say that we'll look at all opportunities, but I think here, in Indiana, we are positioned well.
Yeah.
We think that we've had good growth, and we're projecting good growth with fewer banks. Given our name, Indiana members, our name resonates well, and good brand recognition. So once again, we consider everything, but given that we are positioned for growth and have a lot of momentum, I think we'll continue to focus on that.
So you guys are community-based or segment-based?
We are community-based. Originally we were founded SEG-based, but probably 25, 30 years ago, switched to a community-based charter.
Yeah, that gives you much more reach to go and try out a bunch of other things. Otherwise, doing a SEG-based trading, that's right.
Mm-hmm.
Sounds good. So one last question to you, in the interest of time, right? So, in the era of digital-only banking, so what is your team doing to ensure that human touch still remains the primary focus, not just letting digital or AI run the show? They will eventually, but still you need that. That's the difference between a Citibank and IMCU. That Citibank, okay, I'm being recorded, but still, I'm not talking about an example bank, right? But one of the larger banks, it takes me 3 minutes to go and reach to an agent that I call, or even more to IVRs. It feels like a very mechanical relationship, not a relationship that I would want. So that's the reason I want to bank with the credit union. So what are you guys doing?
Yeah, we as a larger credit union, we are able to have the infrastructure and the bells and whistles that our members want from that digital perspective. So we're able to provide that to them, but at the same time, we know that when they have a big financial decision, they want to talk to someone and have that conversation and help. We want to help put our branch infrastructure. Yeah. So we're building up more branches in the right locations, targeted locations. But we also understand they're not transactional as much as they used to be. They're more of a resolution center where when that member needs us for that big decision, or they're having an issue and they need to come in and talk to somebody and find a resolution, we're there to help. We can do that through in person. All of our drive-throughs now we've converted to interactive teller machines. So,
that's very important.
Yeah, we can extend hours now and have those drive-through branches open later than the lobby hours, and still talk to one of our employees, not a we don't contract that out. It's one of our employees in Indiana that they're talking to and resolving their problem within the credit. So we continue to touch that personal side as much as we can throughout the process.
That was the answer that I was looking forward to, exactly. So that makes us different than larger bank and a fintech. So, gentlemen, thank you again. Thank you for your time. I really appreciate this time spent with me and amazing insights. Thank you.
Yeah, thank you.